Hi, good afternoon, good morning, good evening to all of you, well, wherever you are. I'm Isaac, and today I'm actually doing this live trading session over here from here in Singapore, right? So it's actually late afternoon, so really good afternoon to you guys. Okay, thanks for joining me for today's session. And interestingly, I see a lot of new names, right? So fantastic to have new people. It's also nice if I also see sort of familiar names joining us as well. But no matter, okay, now I've really just done a pre-audio visual check with fantastic stuff over at FP, right? So I just want to be sure that you guys can hear me loud and clear, you guys can see me, and you guys are able to see my slides. More importantly, see my slides and hear me loud and clear. If you guys are able to, please leave a letter Y in the question box or number 1 just for to show me that it's sort of affirmative that you guys are able to see and hear me. All right, thanks so much, Bertha, for the quick reply. Appreciate that. Okay, and I don't really want to wait. We'll just let the rest of the people that are coming in to come in. I don't want to take up too much time. There's quite a bit of things to cover today. And thanks, John, for your quick reply as well. All right, so before I begin, just a very quick normal disclaimer. Understand that information contained in this material is intended for general advice and informational purposes only. It does not take into account your investment objectives, financial situation, or particular needs. Now, FP Markets has made every effort to ensure the accuracy of the information at the time of this presentation, and FP Markets does not give any warranty or representation to the accuracy, reliability, or completeness of the information contained in this presentation. Having said that, it is my duty as your presenter to ensure that whatever I share with you guys today is correct and accurate at the time of today's presentation. All right, and very quickly, this will be the agenda for the day. Okay, I will actually share with you guys some of the top market fundamental news, right? I just want to bring forward some headlines, some eye-catching headlines for you guys to, just to let you guys get a feel of what's really going on a global macro level. And then, of course, if there's time, we'll go through the previous trade setup. If you guys, since I see that most of you, the names are new, right? I don't think the previous trade review will really be very effective or helpful for you guys. So we can actually go through market commentary, right? You guys can ask me anything that you want with regards to chart analysis, technical analysis. I will do my best to reply. And then, of course, over here on the agenda, point 4, there's Q&A at the end. But my style as presenter is that I like to keep things interactive. I don't like to wait for all the questions to be kept to the end. Then it sort of loses its meaning, and some of you may forget your questions, right? So keep it interactive. If you guys have questions, just fire them my way. I will do my best to reply them. If there are multiple questions of similar nature, I will group them together and reply them at an opportune moment. All right, so with that, let's dive right in. Okay, what I want to cover really first and foremost, the first part is really just bring out some top market news for all of you. Okay, some very interesting news headlines, right, and just give you guys a sense of what's going on in the market. Okay, so most Asian stocks today at the start of the trading session during the Asian session held steady, whereas we see US and European stock futures climbing ahead of inflation data, the US CPI data that is coming out later this evening, all right, or later this afternoon from where you guys are at. All right, so this CPI data is really a bit touchy right now, depending on what the Federal Reserve, what the data says. Okay, it really could impact the US Federal Reserve's timeline for stimulus pairing. Okay, and we also have a big story on the commodity side where crude oil further push higher to the upside. Now, energy sector was really the top performer in the MSCI APEC index amid the oil rally. And we see that Japan's Nikkei 225 stock average was set for the highest close since 1990. Now, the story on the Chinese market side, Hong Kong and China, is very different as traders evaluated the troubles of one of China's biggest corporation, China Evergrande Group, okay, as Beijing's regulatory curbs and virus flare-up continues to better the markets. So over here on the slide, you actually see the Tokyo Stock Exchange price index of TOPIX, and the black line actually represents the percent of the TOPIX members that are trading above their 200 days moving average. Okay, so we have more than 70% of the Topix members, right, that are trading above their 200-day moving average. This is really the highest since April, and a lot of it was really upheld by the energy sector. Okay, and also in line with the US market, okay, where US equity futures, we have the S&P futures, okay, finally rising, okay, so pairing some of its losses after the S&P snapped a 5-day drop. Now, all things considered, right, I will show you guys in the charts later, okay, the S&P is actually within a very nice ascending channel, right, and the drop, the last 5 days consecutive drop, right, is actually a very healthy pullback. Treasury yields and the US dollar continues to hold steady, while the focus is firmly on price pressures with a gauge of commodities at decade high. Okay, a lot of people, a lot of traders are actually keeping their focus on the CPI data that is coming up later. All right, so elsewhere, we're going to talk about the commodity side. I'll move on to the commodity story later. But what I really want to talk about is what is happening in the Chinese markets. Now, as you guys would have known, okay, the Chinese regulatory body, right, has been clamping down on all their tech darlings for a couple of months now. Okay, it really started off, what really kicked off this entire thing was the Ant Financial IPO. Okay, and then after that, it sort of snowballed into all the other tech darlings that has been both listed abroad on the US and also in China. Okay, and one of China's biggest conglomerate, China Evergrande Group, which really started off as a property developer, and before they sort of moved and branched out into wealth management products and electronic vehicles, right? They are currently facing mounting protests by home buyers, retail investors, and even its own employees. This continues to raise the stakes for authorities in Beijing as they try to prevent the property giant's debt crisis from sparking social unrest. So if you actually go look on Reuters, look on Bloomberg, right, or even South China Morning Post, right, there is actually a lot of screenshots showing all these protesters gathering and protesting what China Evergrande Group is doing. Okay, asking for their money back, right? And then over here on the chart, you actually see the Evergrande bonds facing another sell-off, right? The sell-off sort of started at towards the end of August, and then it peaked on just a few days ago on the 9th last week, and then after that there was a relief, but then the sell-off seems to be continuing for a second wave as well. All right, so police apparently has been asked to go to Shenzhen's headquarters of Evergrande Group, right? And there's no report of any violent protests yet. Okay, so nothing yet, but it's just that it's a bit scary because this is a group that really has its hands in many different sectors of the market. All right, so Evergrande has actually released a statement saying that it's exploring the sale of interest in its listed electric vehicle and property services unit, as well as other assets. So they are seeking to bring in new investors and renew borrowings. At the same time, it is also discounting properties aggressively to boost sales. Now, this is sort of the market is sort of taking this with a mixed reaction, right? On one hand, you know, some people who want to get in on the cheap will probably pour in more money. On the other hand, you know, there is no smoke without fire. And at the end of the day, people really believe that if a company is struggling, right, if a company is struggling, they will start to sell off more debts, right? They start to release more debts, right, as a debt instrument, right? Or they will sell off their assets, they'll break up the group apart and start selling off different groups of the company for profits here and there to cover up their losses. Okay, so this really started because sometime in the mid of August, Evergrande's billionaire founder Hui Ka-yan, right, said that they were forced to suspend work on some projects due to overdue payables. And at the same time, however, in order to try to appease the home buyers and the general populace, right, Hui Ka-yan actually said he issued a military order to ensure property construction and delivery. However, the 3 repayment options for wealth management related products were informed that, you know, this repayment, okay, may not come through very successfully. However, what the founder, the billionaire founder Hui Ka-yan himself has said, right, he has come out to say that he himself would guarantee payments. I guess at the end of the day, okay, it's really your words versus mine. But we all know that when the markets are concerned, okay, people tend to have a herd mentality when fear starts to build up. All right, one sell-off will lead to another, and then we can actually start seeing Freddie May, sort of crisis, right? So this seems to be a bit of a shadow of what was really the housing bubble over during the 2008 GFC back then. Okay, so this is really for the stock markets. The Chinese markets has been roiled quite badly. We also see that the Delta variant is now resurging again, and there are countries across the world that are finding a lot of difficulty in dealing with the coronavirus. Okay, so that is really the story on the equity side, right? Again, there's a dichotomy between the East and the West. This dichotomy still remains, where the West seems to be coming out, doing a very slow and gradual growth, okay, and sort of picking up the pieces and continuing its growing trajectory, its upward trajectory. Whereas in the East, right, we're starting to see the Chinese markets getting battered left, right, and center again. Okay, so we want to, at this point, move over to the commodity story. Right, commodity story is really a very interesting story right now. Right, we see that commodities, according to this Bloomberg Commodity Spot Index, which tracks a basket of commodities, the key commodities such as gold, copper, aluminium, iron, all right, and palladium. If I'm not wrong, I think you can actually go to Bloomberg and see the breakdown of the basket percentage for this spot index. Right, commodities have actually surged to a 10-year high. This comes as rising costs for goods around the world relies on all this construction and manufacturing, relies on all these commodities, right? The world relies on all these commodities to keep the world running, right? So all these prices of these commodities have actually surged higher. Materials from aluminium to steel have seen renewed rallies, and European gas and power have hit fresh records. A gauge of spot commodities prices jumped to the highest level since May 2011, right? And now, what this really means is that it's actually threatening faster inflation, right? How does this threaten faster inflation? Okay, increasing consumer costs were actually, so when all these commodities increase in price, okay, the consumers are bearing the brunt of all this increase in price, and this actually leads to inflation, where it would thus therefore put pressure on central banks to curb the massive stimulus measures behind such raw material advance. Now, people are also saying that the rise in commodity prices could also be due to the disruption in the supply chain sector, where the virus is actually slowing down the supply chain factor, right? So all these costs of shipping lead to the prices of these commodity goods rising. All right, and with a growing scarcity across physical markets, okay, you have big banks, big financial institutions like Goldman Sachs actually saying that prices could climb higher going towards the end of the year as we enter Q4, all right, or possibly even next year. All right, so some analysts that have been interviewed by Bloomberg are actually quoted to say that physical goods demand has reached such high levels, in fact, above pre-pandemic trends in all but oil. So oil seems to be lagging a bit, all right? So we will get to the oil chart in a while, but what I really want to show you guys here is, you know, that metals have jumped on demand boom and supply worries. Okay, so this is the LME metals index, right? So it actually tracks metals, precious metals like iron, aluminium, copper, okay, gold, all right, and nickel, right? So all these are seen as the market barometer, right? When economies are growing, when economies are expanding, right? Copper, aluminium, iron, all these precious metals prices tend to soar because there's a greater demand for all these commodities. All right, so massive global stimulus measures are keeping metals demand strong and helping copper to remain historically high. However, this has been overshadowed as China continues to move to curb metals production to be in line with the Paris Accord, where they actually pledged to reduce production. Okay, so the only thing that could really, you know, put a stop to the forward march, the rising cost of metal prices, right, would be China reducing, okay, would be China reducing their curbs, right? As long as China puts all these curbs into practice, right, you should see metal prices go higher as well. So there are reports coming out that say that, you know, because of the curbs that China has implemented, right, nickel prices has actually hit the highest since 2014 and pushed local steel prices higher. All right, so that's the metal side. Now, on the slightly different side, okay, you actually have oil, right? So not all commodities are doing so well. All right, you have oil prices that are remaining relatively stable. My personal bias is that we should see oil prices pushing higher, okay, because oil prices are really lagging. But I will show you guys that in the technical charts later. But for now, the fundamental story is that after jumping 10% in the final week of August because of Hurricane Ida tearing through the Gulf of Mexico, crude has actually continued to hold near $70 a barrel in New York for the most of September. So you actually have the US WTI oil price index over here. Okay, you can see that it's really fluctuating sideways, all right, around $70 a barrel. Now, while the storm caused an unusual bullish shock by keeping a large amount of US oil production offline for 2 weeks, right, therefore essentially saying that it has cut supplies, all right, this has been offset by concerns about the impact on demand from the fast-spreading Delta variant, okay, with China seeing another flare-up, and now you're also talking about another variant called the Mu variant, right? So there are news coming out on that as well. Okay, so however, there are signs that high commodity prices are further feeding through to consumers, right? So this could once again contribute to the inflation story. Okay, so tonight's CPI data, this afternoon's CPI data is really something that a lot of traders will be looking out for. Okay, so that is the story for oil. And finally, we move over to another one of the precious metals that really would be quite telling. Okay, so we see gold, for those of you who have been trading gold recently, okay, it's really in a broad range, very ugly, trading sideways, right? It's really because gold is holding steady ahead of the US CPI data. So a lot of market price action really hinges on the fundamental data release that will be taking place later today. So gold steady as investors waited for US inflation data that could affect when the US Federal Reserve will start reducing their stimulus. Okay, so analysts that were interviewed has been saying that gold prices are actually holding steady as investors await the August inflation report, which could deliver some signs that inflation is transient, right? However, the Delta variant shock to supply chains across the world will continue to show some positioning for an upside surprise. All right, so it's really talking a lot, but just telling you guys, let's be cautious on the data that will be released later. All right, so if the Delta variant really sort of overshadows everything, then we should see a bit more upside, all right, on gold prices as people continue to buy into gold as a safe haven. Otherwise, okay, inflation should be transient and gold should drop lower. Now, if you ask me, all things considered, on a very long-term basis, right, going forward into the next year, I'm thinking that gold prices should generally dip lower. All right, okay, but once again, that is my bias. I will show you guys later why I think that is the case from the technical perspective. Okay, so that is really the fundamental story that we have on equities, on commodities, right? Looking at metals, looking at oil, okay, and then looking at precious metals such as gold. Now we move over to the FX side of things, right? So the 1 week relative performance against the USD, this is the G8 currency's relative strength. Now it's a bit easy to decipher what's going on over here. Everything to the right of the USD, okay, everything to the right of the USD is underperforming the US dollar, right? So it's weaker than the US dollar. Everything to the left is outperforming the US dollar, which means that they are actually stronger than the US dollar. Okay, and just by looking at this very clearly, right? We have the pound, the CAD, the Kiwi, the euro, okay, outperforming the US dollar, whereas the traditional safe haven currencies like the yen and the Swiss franc really being the poorest performance at the start of this trading week, right? So the sentiment that we are actually getting from the FX market is really one that, you know, we're a bit more risk on. We're leaning more towards the risk on side. But then again, okay, in terms of a technical picture, right, you always have this. I'm sure some of you have heard this saying, right? Buy the rumor, sell the news. Okay, so it could really be this increase in volatility for buying all these risk on currencies first before key news such as the CPI data that will be released later will cause the markets to reverse. Okay, however, I'm just saying that could be a likely scenario, right? I still very much prefer to look at things from a technical perspective and then looking at the cross FX pairs correlation. Okay, but understand that at the start of the week, the relative performance of the G8 currency is telling us that really we are seeing things from a bit more of a risk on perspective. All right, at this point in time, are there any questions with regards to the fundamental story? If not, I really want to go into the charts now and just look at the different asset classes to try to get a confirmation and get a read on what is really the risk sentiment for this week ahead. All right, once again, if you guys have any questions or any charts you want me to analyze, right, feel free to leave your request in the question box. I will get to them. Okay, so with that, let's move over to the charts. Okay, let's start off with the US equity futures. So US equity futures, okay, like what I mentioned to you guys, is really within an ascending channel. Okay, and this channel can be seen very clearly. You just draw a parallel line. You can see that this is really within an ascending channel, and price will actually hold around above this support area, okay, where we are holding above the ascending channel support. So not a surprise there. And every time it does a pullback, the pullback is a healthy one. So just looking at the cycle analysis and the magnitude of the pullback, every time the pullback is of around, you know, around 3 to 5%, right? 3 to 5% drop. Okay, so over here, the last three times that it dropped was actually a range from 2.8% all the way to 3.6%. Okay, and if we were to measure the drop now, okay, if we assume that the drop is completed, right, we have a healthy range of around 2.5%, which, if you ask me, we could still see a slight further downside. All right, that is possible. Okay, the market could just be taking a breather. But at the end of the day, still generally the bullish momentum is still holding on the market, right? We should still see further upside on the US equity futures. Okay, and very quickly, let's go over to the US dollar index. Right, on the US dollar index, okay, we are in sort of a broadening megaphone pattern. Very, very strange pattern here. Some of you will say it's an expanding triangle. Some of you will say there is a megaphone pattern. But what remains clear is that the US dollar index is actually in a very ugly configuration right now. If anything, I really do not like to trade the megaphone pattern. Okay, you can actually do a retracement. You can see that price, if price is currently, the dollar index is currently reacting below the 50%, right? But if it chooses to push higher because of this expanding megaphone pattern, expanding triangle pattern, there is still another resistance, intermediate resistance at a 61.8 Fibonacci retracement in line with this graphical swing high over here in close that we see. All right, of course, there still remains to be a lot more upside. If you were to ask me really what the USD is trying to do, okay, I would still think that the USD should be bullish on a couple from 1 to 3 months time window, right? But that's only because from a technical perspective, we have clearly broken out of this descending trend line resistance, turn support. In terms of market structure, being very strict, we are making higher lows, okay, and higher highs, right? So we should see price make another higher low, okay, before pushing up for another higher high. All right, but once again, this is really a very long-term view. We just want to take things step by step. So on the daily, what I see right now is really this expanding megaphone pattern, which is ugly. All right, so really mixed on the dollar, but leaning more towards a slightly bullish bias. Okay, and very quickly, let's go over to the US 10-year yields. Okay, this will be pretty telling for what is going to happen. Right, so on the US 10-year yields, okay, on the weekly, we don't really see any real big change, right? According to Jerome Powell, the Fed chair, who says that the inflation scare is pretty transient, right? We did see a drop since the start, okay, since sometime in March, April, the first quarter of the year, right? We saw a drop of interest rates, right? But then we sort of bottom out before making a bounce. Okay, so on the daily, there is actually a short-term counter trend ascending trend line support, which the US 10-year yield is holding very nicely against, and we seem to have broken below this. Okay, if I'm going to draw it something like that, we seem to have broken above, right? Sorry, we seem to have broken above a descending trend line resistance, turn support. In close, there is also a trend line breakout and pullback. So we could see, okay, assuming that this is one completed move, we can do a retracement. We could see inflation, okay, actually push higher to the 50% first. Why I chose the 50% is because it is a strong graphical overlap resistance, right? It's a strong graphical overlap resistance over here, where price has tested it as support, broke below, tested it once as resistance, and now we are pushing back up against it right now, right? So the US 10-year yield, all right, bullish. The dollar index, okay, neutral with a slight bullish bias, and then of course the S&P bullish as well. So at the end of the day, okay, the color that the market is giving us is one that is of a cautious risk on sort of environment. All right, you have the dollar going higher, you have the S&P sort of recovering from its lows. If the fundamental story is to be believed, right, you have the S&P sort of recovering from its lows. So we should see a slight risk on environment, right, but from a very cautious recovery point of view. Okay, so that is essentially the overall view that we have on the markets from a fundamental perspective. Right, any questions at all? Okay, I see some of you actually having hands raised, but okay, if you guys have questions, just feel free to ask the questions. If not, okay, no need to raise the hands. All right, so since there are no questions from a fundamental point of view, let's move over to the technical side. Okay, the technical side of things. What are some of the best setups that I see that could be taking place? Right, I want to cover oil first, UK oil especially. Right, I mentioned earlier that I want to show you guys oil, and really back at the end of August, I was saying that oil could actually drop lower, but oil sort of traded sideways. Okay, and it has broken above this descending trend line. Resistance turns support, which is why now I see that oil could be a lot more bullish. Okay, especially on the monthly. Right, I want to show you guys something. Okay, we have actually oil testing a graphical overlap support. Right, in close over here, you can see price is rebounding above this graphical overlap support here very clearly. Right, so we, if anything, right, we could see the price pushing, price could possibly push towards 2018 September swing high of around 82, 85. Okay, so I'm just going to leave all these levels here right now. I'm going to tidy this up, change this to rate for resistance, and tidy this up. Remember, this is September's high as well. Okay, quickly go down to the daily. right? On the daily, like I said, we have actually already broken above the descending trend line resistance turn support, right? So we have closed and open above this trend line. So at the end of the day, right, I'm seeing further upside for this. You can do a retracement of the last move from low to high and open off Fibonacci ratios. Okay, the first level of take profit is this high right here, the negative 27.20, right? And price is actually holding very nicely above the 23.6, right? So price has yet to really decisively break below the 23.6 towards the 38.2, right? But what I'm thinking is price could very well come back down to this graphical overlap level. Okay, before pushing higher, right? So the September 28, 2018 is actually a very long-term target, right? So for now, let's set our sights a bit nearer, and this 30th July, okay, should be an ideal level that we are looking at. Okay, so let's go down to the 4 hours. Now the 4 hours has a very interesting configuration. I just want to show you guys. Okay, price has sort of formed a what you call a pennant pattern, right? Some of you would argue that, okay, Isaac, maybe this is not a pennant, okay, but at the end of the day, it is still a wedge, right? And if you want to do a wedge breakout, you can measure the base of the wedge projected one time from the breakout level. And it actually falls very much in line with our negative 27.20 Fibonacci extension, retracement that we identified on the daily. It's in line with our July 2021 high, okay, or rather the 30th July high, okay. So this could very well be a very nice target for oil. Okay, so if anything, for me, I'm seeing generally more upside in oil. All right, and let's go over to the precious metal, gold. Okay, I told you guys I want to show you guys gold. All right, gold, nothing much on the monthly, very unclear price action. Price is really sort of trading sideways in a range. This is very similar to what we identified from the period of 2011 all the way to the end of 2012, right? So about a year, right? So about a year. We have also seen a year of gold really trading sideways. Going on the weekly, looking at market structure, you can see that price is holding below this long-term descending trend line resistance, right? And price could do a short-term push up again before going lower. Okay, so we want to have a strong support level over here. This is really a very strong support level. Why I say so? Because if you look to the left, right, this was a previous resistance turn support, right? Where price tested once, twice, a third time. Recently, back in August, the flash crash, right? So this is a strong support level, the 1676. All right, and let's quickly go to the daily. So on the daily, I want to tidy this up a bit, right? On the daily, you can actually draw a descending trend line resistance, and you can see the price is kept below the descending trend line resistance. And if you do a retracement of this entire move, okay, price actually tested the 61.8 retracement level before reacting lower. Okay, so we have reacted below a strong resistance level, touching this descending trendline resistance as well. I'm thinking the first level of support can be this close down here. You can do a Fibonacci retracement low to high. It's around the 60% level if you include the flash crash in August. Without the flash crash, it's around the 88% retracement level. Okay, and very quickly, let's go down to the 4 hours. So 4 hours, we actually see that price is trading sideways within a range, right? Price is trading sideways within a range. But I want to show you guys that we could see a short-term bounce before a further drop, right? Long-term, very clear. I made it very clear that we are leaning towards a bearish bias, right? But I want to show you guys that in close on the 4 hours, if you draw a trend line connecting all the lows, price is really testing a support level right now. Okay, price is really testing a support level right now. Using a Fibonacci retracement, we are still kept below the 38% retracement level. Okay, so a break and a close below this ascending trend line support should see price actually drop a lot lower. All right, so there are two alternative scenarios right now for me, right? Is that, okay, either price comes back to test this resistance level, right? Either price does something like that, where it pushes up and then after that it breaks downwards, right? Or, right, price could push up, break higher, and retest the previous high again. So for me right now, this is really more key levels to watch if I'll do a retracement from the low to high and open off Fibonacci ratios. Okay, we don't really see any strong Fibonacci confluence level at all. So that is if we do not include the flash crash. If we include the flash crash, right, you're starting to see the 3820 retracement, the next level of support, which is quite close to our negative 2720 as well. Okay, so these are really the levels to look out for. Okay, these are the levels that I would actually recommend you guys to look out for gold. But a lot of it, again, hinges on the CPI announcement that would be happening later on today. All right, so that is for gold. Now I'm going to move over to dollar CAD. All right, one of my favorite pairs. So let's go take a look at dollar CAD. So dollar CAD on the monthly, right, you don't really see a lot of movements. Okay, but one thing I like about the dollar CAD is that, you know, there is a very strong trend line breakout and pullback. So what I'm waiting for is a very strong rejection in this area. Okay, so I like to play this trend line breakout, pullback, and then wait for rejection. Once the rejection is confirmed, right, we can actually trade it lower. Okay, and because this is on the monthly, there leaves a lot of room for a great downside potential, right? At least that's from my point of view as a swing trader. So we go over to the weekly. Weekly, once again, we don't see a lot of chart patterns, right? There isn't a lot of chart patterns. You can do a retracement from the last swing high to the low. Open off Fibonacci ratios, you see that price actually came close to the 3820 level, right? So this really for me is actually a pretty strong zone, this resistance zone right here. Right, so there is a possibility that price could push up towards this area before going lower, or price could just drop from here, right? But what remains is the fact that this is a strong resistance zone for me. All right, and then of course I'm just going to use it using the eyeball, all right, to pick out a swing low as a general support. All right, so key levels, we identify the key levels first. Let's go down to the daily. Okay, on the daily, we see price in a very interesting configuration. Initially, it was lower highs, right, and higher lows and higher highs. However, now, even though we have just formed a higher low, we see that price has formed a lower high. So this is the first clue to tell us that the market could really be reversing. Further, there is a trend line. Okay, what seems like a possible trend line breakout. Okay, breakout to the downside. Okay, could very well take place as well. Okay, not the best trend line, but anyway, that's just sort of giving us the general idea. We can do a Fibonacci retracement of the high to the low. We see that price came close to 61.8. All right, so this is a very nice daily resistance level as well. Negative 27 as the first possible, as a possible take profit level. Of course, you can even use the last swing low if you want to. Right, so just highlighting the strong support levels and resistance levels. Let's go down to the 4 hours. Okay, on the 4 hours, we don't really see any real pattern, right? If you are thinking that this could be an Elliott wave movement, right? If this is A, okay, B, C completed, then it should be 1, 2, 3, 4, 5, right? So let's use Fibonacci extension, 0.1, 0.2, 0.3, 61.8 extension is right here in line with the wave 5 target. So we could expect price to do a push up here, okay, before any chance of a further drop. All right, so this is what I see. In close, you could also possibly draw a ascending trend line support, something like that, right? And you actually see price is holding above this short-term ascending trend line support. But right now, admittedly, it's really still trading with it. It's sideways, okay? But this dollar cat bullish idea is in line with the dollar being leaning more towards a bullish bias. Okay, so in terms of correlation, for me at least that checks out. But I will still wait for price to actually come closer to my resistance before looking for opportunity to go short. All right, so that will be dollar cat for me, right? Okay, Jalo, I hope I've got your name correct. All right, if I didn't, please forgive me. No offense, I hope. You requested for pound dollar, so let's take a look at it. So let's start off with pound dollar on the monthly. On the monthly, nothing much to see except that price is holding below a long-term resistance level. Okay, long-term resistance level. Let's quickly go down to the weekly. Okay, on the weekly, in terms of market structure, we see price pushing higher, coming back down, stopped over here before pushing higher. So we can actually take retracement from this swing low all the way to the top, right? Because it's really where the push higher started as well. So low, all the way to the top, we see that price is kept above 38, right? So we can draw a support level right there. And I want to tidy this up. Resistance zone, Fibonacci 38 retracement in line with graphical swing low support. Now that we've got our weekly key levels, let's go down to the daily. Okay, on the daily, the market structure is generally a bit mixed, right? If we see in the past that price was making higher lows and higher highs. However, as price came down, it gave us a first clue, lower low, and then it gave us a second clue, lower highs. So the trend could very well reverse, but what is tricky is that price made the same low, right? Price made the same low. So we could in fact see price becoming stuck in a sideways range, right? So price could very well become stuck in a sideways range. Something like that. And if you were to draw a trend line from the top, connecting all the possible candlestick touches without cutting the candlestick body, once again, you see that price has done this trend line breakout, retest, okay, and then we should see it push higher once again. Okay, I'm gonna just zoom in on this area on the 4 hour. I'm going to tidy up the 4 hour chart. Okay, the trend line on the 4 hour shows a much nicer trend line breakout retest. Okay, it also retested, I think, on the 38% retracement level of 50%. So you see it's on the 50% in line with the descending trend line. Resistance turns support. Okay, you can actually draw another ascending trend line support, holding price. All right, what I'm expecting, price is actually nearing a high. So there are two ways of playing this. This could be a resistance. One is you wait for price to come back down to the trend line, okay, and then after you play a bounce up, right, to this last swing high, or if you want, you can even play all the way higher to the very long-term resistance zone. Give me a moment. Something like that, right? But this is on a 4 hour. It's going to be a very long-term trade. Generally, I think to the last swing high would be much wiser. Okay, we can use a Fibonacci retracement from the low to the high. You can see confluence negative 61.8 retracement is in line with the swing high on the 30th of July, right? 50% is here, once again at a recent swing low, so this can be a possible entry level. And then of course my stop loss, I would actually put it at the last swing low here. Now the reason for the stop loss being here is really to give my trade a bit of room to breathe. And you can see that, you know, the risk reward ratio for a pound dollar seems to be pretty nice. Okay, risk reward ratio, let's see what's the ratio on this. Okay, about 2.7, right? So it works out to be a very nice risk reward ratio for pound dollar if I'm waiting for a pullback. But if I'm waiting for a breakout, okay, if I'm waiting for price to actually break out to the upside, then the risk reward will not be very good, right? But at least there's sort of a confirmation if I wait for a breakout. Okay, so for me personally, I prefer to wait for a pullback on an entry, something like that. All right, last but not least, you can actually also look at indicators. All right, you can see that momentum indicators, price is holding very nicely above the moving average. Okay, 21 is a bit sensitive. Let's open it wider at 55. So we see that 55 moving price is holding very nicely above 55 moving average. MACD is above 0, showing that there's room for further bullish momentum, right? So definitely the bias for pound dollar is really to push up to the upside, but just remember we could very well be stuck in a sideways range on the daily time frame. All right, so that's the view that I have for pound dollar. Again, it's not a recommendation to trade. Please go back and do your own analysis. If it checks out with mine, fantastic. If it doesn't, I would still recommend you to have faith and trust in your own trading system. All right, of course, that only works if you're a profitable trader. If not, then it's always better to practice first. Okay, so I'm going to leave the key levels here. All right, just let me just change this to a possible entry level. All right, so the key levels are here for your reference, Jalo. All right, you can take a screenshot. Okay, so we have about 10 minutes. If you guys have any requests, please send them my way. I think I have time for about another 2 more charts or so, right? If not, I would actually cover a few more charts of my own to share with you guys. Okay, so Farhan, you're asking what's with XAU AUD. All right, very interesting that you'll be trading gold against the Aussie dollar. Okay, and if you don't mind me asking, right, you're saying there's a lot of significant movement since yesterday. I think you are probably trading on the 1 hour time frame where you're starting to see a lot of chop, right? So you're saying that there's a lot of significant movement. But if you're actually looking on a bigger time frame, on a 4 hour, on the daily, really there really isn't much movement, right? It just looks like, you know, prices are trading sideways within range. Okay, so my advice to you, okay, again, just looking at XAU AUD, right? I've covered gold earlier already. I'm saying that gold long term I'm bearish, right? XAU AUD, okay, we are still kept below this descending trendline resistance. Okay, holding very nicely below it on the 4 hours. Price touch once, tested it many times here. Second time, tapped it here the third time, right? We could see a further push lower. But just remember, it's still within a sideways range. If you ask me, I'll wait for a breakout below the range, okay, before I go short. All right, and then a stop loss just above the range, above the descending moving average. Okay, sorry, above the descending trend line resistance, right, with a take profit target. Okay, I'm just going to do a Fibonacci retracement with a take profit target around the 7860, right? The 7860 over here, where we have actually a graphical overlap level. Okay, so this is what I see on XAU AUD, right? So this is really a waiting game, all right, Farhan, a waiting game for XAU AUD. Okay, again, don't just trade on the lower time frame. Always try to identify what's the price movement on the bigger time frame. Don't miss the forest for the trees. All right, so I'm going to leave the levels here, Farhan, for you to take a screenshot. And yes, Veronica, I see your request as well. We will move over to pound yen. A lot of you requesting a lot of pound pairs. So I do like pound yen. Okay, pound yen, let's start off with the monthly. Again, monthly, nothing much except that we are kept above this resistance. We're kept below this resistance level, right? So I don't really want to waste too much time on the monthly. Let's go down to the weekly. Okay, for presentation's sake, I'll just take the last swing high. All right, pound yen, very clear. We have a strong support at this level here, graphical support. All right, and what I want to show you is that if you were to draw a trend line, okay, we have already actually broken up above the trend line to the downside. But let's go down to the daily, right? Let's go down to the daily. Okay, on the daily, right, you actually can draw a nicer descending trend line resistance, and you can see that price has actually broken above the descending trend line, right, to the upside. Okay, so like what we say on pound dollar earlier, right, we could see a slight push up on the pound dollar before a further drop. But the problem with pound dollar is that it's against the dollar, right? The dollar we're bullish on a bigger time frame, right? So pound yen, yen is really the serious underperformer as we go back to the slide here, right? And pound is the strongest outperformer for this week so far. So it makes sense to see the pound actually push up a lot higher. Let's go down to the 4 hours. Okay, on the 4 hours, right, you can actually draw an ascending trend line support. Okay, price is holding very nicely on an ascending trend line support. I'm trying to see whether this is a channel. It's not, but this doesn't change the fact that, okay, if you do a Fibonacci retracement of the last movement on the 4 hour, negative 61.8 is in line with the graphical swing high back on 29 July. All right, so if anything, I'm thinking the price could actually pull back down to the ascending trend line support on the 4 hour before pushing much higher. All right, so long-term picture for pound yen, we are actually bullish, right? Short-term on the 4 hour, we are bullish as well. Let's see whether there's any nice opportunity on the 1 hour. Okay, on the 1 hour, you can actually tidy the trend line up. There is a very clear zigzag here. Just remove this. A very clear zigzag where we can use Fibonacci, projection, expansion, same name. Right, you can see that we are price is reacting there because it is the 61.8 expansion level. Right, so we should see a pullback down to this area here. Okay, possible entry level. Right, before any chance of a push higher towards 100% first take profit level. 127.20 in line with this level here, graphical swing high. That will be final take profit level as well. And then of course the stop loss outside of market structure. Still a very nice risk reward, slightly more than 1 is to 2.5, right? This can be the stop loss, right? If price breaks below the stop loss, you know that the market structure is wrong and is changing. Our bullish idea is invalidated. All right, so this, Veronica, for you, this will be the key levels that I see on the 1 hour. Again, please go back, do your own analysis. Okay, I think the indicators are showing room for further bullish upside as well. You can see momentum indicator holding very nicely above 55 moving average and also above the MACD. The MACD is above 0, no divergence, right? Above 0 and no crossing over as well, right? So we're going to see a lot of bullish pressure coming forward for the pound yen. All right, and finally we have time for one last chart. John, this is for you. Let's move over to the pound Aussie. Okay, so previously it called for a drop. I was saying that if it broke above the stop loss, it would go higher, but it didn't. So it touched the first take profit, touched the second take profit. Let's take a relook at it again. Okay, on the monthly level, nothing much to look at, right? Very weird holding within a very interesting squeeze. Okay, so very, very weird on the monthly. Let's go down to the weekly. Okay, I tend not to look at indicators only towards the end because indicators can tend to cause me to have a bit of bias, right? I can draw ascending trend line support, right, on the weekly. So far, only 2 touches. What I'm thinking price could do is price could very well come back down to the 61.8 level. Okay, on the weekly, right? So it could come back down, right? I'm not saying it will, okay, but there's just 61 point on the weekly. Again, this is a very long-term time frame, so there's a resistance right here. Let's go over to the daily. Okay, I don't like the structure on the daily. I'm just going to tidy up the trend line a bit. Okay, and you can see that if I were to draw another trend line, so that's the nature of trend line. It's very subjective, right? But you can see that trend line has broken out of this to the downside, waiting for a retest of it on the daily, right? The retest could be anywhere close to around the 61.8 resistance level, in line with the trend line. So really is a zone. Okay, so waiting for this to happen. Could be. All right, now since we're on a daily, let's quickly go down to the 4 hours. Removing the long-term trend line, just want to focus on this area right now. Okay, ignoring this trend line as well. It's going to be a bit hard to see it on the 4 hour, on the 1 hour if you're just trading like this. All right, again, I will refer to this chart right now. Aussie is really mixed at this point in time. All right, pound is the strong outperformer, and so far all the pound pairs that we have looked at, right, we are seeing limited upside. Okay, some very strong upside. Okay, so I would be cautious about going short on this. All right, John, I'll be cautious about going short on this in terms of FX pairs correlation, right? But at the end of the day, okay, what I'm seeing right now is that the market structure is changing. Okay, the market structure is changing. Previously, we had the market making higher lows, right? And then, of course, making higher highs. And then suddenly we see market making a lower low. Okay, so what I want to wait for is for market to make a lower high and come back down before I can confirm that the pound Aussie is actually bearish. If not, for now, really this is just a bigger time frame analysis, right? And the movement on the lower time frame is actually unclear. Okay, so John, I would actually hold off trading pound Aussie for now, right? I think pound yen, pound dollar, a lot clearer. Okay, John, I hope this answers your question. All right, so everyone, at this point in time, I am very quickly running out of time, so I just want to do a very quick recap for all of you. Right, the fundamental story is that we are actually risk on, but with a slight hint of caution. I think a lot of it is gonna play out tonight after the release of the CPI news, or later this afternoon after the release of the CPI data. So keep your eyes peeled out for that, right? You want to avoid the markets, especially if you're trading on the lower time frame, such as the 1 hour, the 30 minutes, the 10 minutes chart, right? If you guys are trading on a lower time frame, you want to be a bit more cautious about the volatility during around the news announcement. Apart from that, okay, I think the markets are pretty clear except for the dollar story. The dollar is a bit mixed in that very strange configuration. All right, so with that, thanks everyone for your time. Okay, okay, this is really for you, Farhan. Okay, natural gas. All right, so let's look at natural gas. Okay, looking at natural gas futures, right? I wonder whether there's any other okay, CNG, not NG1. Okay, no, XNG. Okay, so you're looking at I suppose you're looking at the NYSE one. Okay, so interval is not applicable unless it's subscribed for, right? Long term. Okay, long term in terms of market structure, very clear in a downtrend, right? And if I were to do a retracement of the last high to low, okay, there seems to be a bit of a push up towards the 61.8 retracement level, right? But I'm going to take the graphical level. We are still kept below this resistance here. Okay, and then after that, let's go over to the weekly. Okay, weekly. If you guys are Elliott wave practitioners, right, I'm seeing a wave 1, 2, 3, could be a wave 4 done. Rule of alternate seems to be in line. Okay, finally wave 5. Let's see this 0.1, 0.3, 0.4. Okay, wave 5 should say that it's going a lot higher, but 38.20 is pretty much in line. There's another way of looking at wave 5. Okay, the second way of looking at wave 5 will tell us that the 61.8 Fibonacci extension should be in line with the 456. So this could very well be a target for natural gas as well. Okay, so in terms of Elliott wave, we are also holding on the weekly, we're also holding above a strong ascending trend line support. Let's go down to the daily. On the daily, very clear, we have broken out of this bearish structure with a descending trend line resistance, right? Turn support. This seems like the story for oil as well, in line with UK oil that I've showed you guys earlier, right? The commodity story. So what you want is there's a resistance right here. Okay, so these are the key levels for us to take a look at, right, Farhan? I don't have data on the lower time frame, but I'm just going to show this for you. Okay, just keep this white and keep the levels here for you. All right, so Farhan, I just leave this here for you to take a screenshot. Okay, and you know, you're welcome, Farhan, you're welcome, Veronica, you're welcome, Kim and John. And once again, thanks everyone for taking time to join me for today's webinar. Right, if you have any feedback, please email support@fpmarkets.com. Right, my colleague over there would actually be more than happy to assist all of you. Otherwise, do keep your eyes peeled for all our upcoming webinars. Right, you can go to fpmarkets.com/trading-webinars/. Over there, you can actually register for our upcoming webinars. Until the next time, everyone, take care. Wish you guys all the best in your trading journey. Trade safe, stay safe. I'll catch you guys again. Goodbye.